Hey there, it's Shelly. I feel like I'm always wearing black. Am I always wearing black? I need to step it up a little bit. We're going to talk about timing today. If you've been watching the market and wondering, should we move now or should we wait? You're not alone. Timing the real estate market has always been one of the most talked about and misunderstood topics. And lately, it's really getting even more attention because of conversations happening at the federal level, including proposals around mortgage rates and housing affordability. One idea that's been discussed publicly is a proposal from Donald Trump to purchase roughly $200 billion in mortgage backed securities as a way to push interest rates lower. Whether or not that ever even happens isn't the point, and here's why. Let's say this did happen. It would be a short term mortgage rate drop, and this is what many people don't understand. When mortgage rates dropped to 4% and below in 2020 during the COVID crisis, it was because of the Fed's quantitative easing. And when they did that in 2020 and 21, they weren't just buying short term treasury bills, they were also buying 10-year and 30-year bonds. And on top of that, the Fed was buying mortgage backed securities. They were doing all three of these during that time because we were in a crisis. Today, they're doing short term T bills, and Trump wants to come in and also buy mortgage backed securities. But the component that matters the most for 30-year mortgage rates is the medium treasury bills, the 10-year and the 30-year. And the 10-year affects mortgage rates. That's what really affects it. So waiting for rates to drop can be a trap. A lot of buyers and sellers are waiting for that to happen before making a move. The assumption is that once rates come down, everything will suddenly feel easier, more affordable, and more certain. But historically, that's not how markets behave. When rates drop, buyer demand increases, competition increases, prices often rise, and leverage shifts away from buyers. So while a lower rate sounds appealing, it often comes with trade offs, fewer choices, more pressure, and stronger competition. What's really happening right now? Right now, we're in a market where inventory is still relatively tight. Buyers are more cautious, and selective sellers are open to negotiation. And opportunities exist because not everyone is jumping in at once. This is what a strategic window looks like, not a frenzy, not panic, but a moment where prepared buyers and sellers have options. Why timing the market isn't the same as timing your life. Here's the part that matters most. The best time to make a move is rarely about predicting the market perfectly. It's about whether a move makes sense for you and your family and your goals, your timeline, your lifestyle, your financial picture. People who successfully buy or sell almost never do it because they timed the market flawlessly. They do it because they were prepared, they were informed, and they were very intentional. They knew what they could afford, what they wanted to solve or improve, and what trade offs they were comfortable making. What smart moves look like right now, if you're thinking about making a move, you may have more negotiating power today than you would in a lower rate, higher competition environment as a buyer. You can refinance later, but you can't renegotiate price after you buy. If you're thinking about selling, you're competing with fewer listings right now than in past peak cycles. Buyers are serious and qualified, and strategy matters more than speed. This isn't about rushing, it's about positioning. The bottom line, big policy ideas come and go. Markets react, headlines change, but the people who feel confident about their real estate decisions are the ones who stop waiting for the perfect moment and start planning intentionally. If a move is something you want to make, not something you feel pressured to do, then the best next step isn't guessing where rates will be 6 months from now. It's getting clear on your options, your numbers, your strategy, because timing the market is unpredictable. Timing your preparation, that's something you really can control.